All right, now let's continue on and let's talk about something else with individual taxation called deductions. Now we can do either what we call a standard deduction, and that's where the government says, hey, you're alive, you get $12,000 automatically, or married filing joint, $24,000, so it might be a good reason to finally get married. Or you can itemize, and itemizing is called a Schedule A. So what we're going to do is on our Schedule A, we will itemize these items, and as long as they're more than $12,000, it's probably worth it in order to itemize your deductions. The first one is called charity. And again, this is going to be a mnemonic that I suggest you commit to memory. What does it stand for? Charity, other miscellaneous, medical, interest, taxes, theft, and casualty loss. The first one is called charitable contributions. Now, when I'm walking down the street, I see someone and say, hey, here's a free donut. Is that tax deductible? No, they are not what we call a qualified charitable organization. Therefore, it's not deductible. So you've got to be giving it to a charitable organization, but we can be giving things like property, we could be giving things like cash, you could be giving things like appreciated stock. It doesn't mean something you appreciate, but it's gone up in value. Now the limitation is about 50% of AGI, which stands for adjusted gross income. That means that we're going to take on the face of the front of your 1040 and basically say how much is adjusted gross income. Let's say it's 100 grand. The most you can deduct is 50% of that. The rest you're going to carry forward. Now when we talk about giving, I've got these cute nephews. I go, hey, give me 5, high 5, low 5, give me 5. You carry the rest forward for 5 years. Get it? That's cute. Now, the other thing that's changed for 2018, 19 through 2025 is you can deduct 60% for cash contributions. Used to be 50, went up to 60. I also mentioned just now about appreciated stock, up to 30% of your AGI, adjusted gross income. The other one is miscellaneous, other miscellaneous. COM is other miscellaneous. That would be, for example, like gambling. So I love going to Vegas. Come on, lucky 7. Ugh, I always lose, but I look around and it's so beautiful. Why are these casinos so beautiful? Because I'm a loser. I lost a lot of money, loser, 3D loser. Any way you look at it, you're still a loser. So that would be other miscellaneous. Deductions. We've got medical. Medical says that you can deduct your medical things, but your medical expenses, that's also up to 10% of AGI, adjusted gross income. But that's going to be for medical things such as medical services, transportation, prescription drugs, health insurance. All of those would be things also for someone who is a dependent. You can deduct all of those things as well. So those are going to be your medical expenses. The next one is interest paid. Now the interest paid, let's say you go out and you buy a home. This changed. The most you're going to take is the interest on $750,000 of acquisition indebtedness. That's when you go out and you buy the home. It used to be $1 million plus equity interest of $1.1 million, but they changed it down from $1.1 million down to $750,000. So that's the most the interest paid. Taxes is a biggie. This is up to $10,000. It used to be basically unlimited, but this is going to be for things like state and local taxes. This is going to be for property taxes. And if you live in an expensive state like me in California, I'm going back to Cali, here's the deal. What they say here is, let's say, for example, state taxes are 13.8%. I can only deduct up to $10,000. Wow, not a lot. Property taxes, 1.25% of $1 million, $11,000, you're already hitting it. So it used to be unlimited, now it's limited to $10,000. With theft and casualty, this basically says that you can deduct up to 10% of AGI, adjusted gross income, minus $100 per event. But the big change on this is it has to be somewhere that was declared a federal disaster area. So it's not just you losing your wallet or your personal house burns down, but the government has to come in and say, hey, this is a federal disaster area. This is something that we're going to look at as far as the whole disaster area. So that's how much it is. So these are, again, the things that I always suggest that you COMMITT, that you commit to memory. Charity, other miscellaneous, medical, interest, taxes, theft, and casualty. That would be your itemized deduction Schedule A versus your standard deduction of $12,000 or $24,000 married filing joint. This is what we're talking about in your Schedule A for itemized deductions for individual taxation.